Welcome to Starting Nowhere. I'm your host, Brandon. Do me a favor and click that like and subscribe button so you can see more Starting Nowhere. Today, my guest is Miss Timalyn Bowens. Timalyn is a tax expert who helps people who have gotten themselves in a little bit of tax trouble, or she helps people stay out of tax trouble. Today, we're going to talk about all the ins and outs of what's going on with taxes. Please enjoy today's episode. Thanks for joining me today, Miss Timalyn. Why don't you go ahead and tell everybody a little bit about yourself and why you're on here today?
Well, thank you, Brandon. I want to make sure that I do thank you for extending the invitation for me to be here. So, my name is Timalyn Bowens, and I'm an enrolled agent licensed through the Internal Revenue Service. And I am on here so we can talk taxes today. I specialize in helping people get out of tax trouble, but I definitely believe in preventative care. So, having these conversations to me is very beneficial just to the general public because, believe it or not, I don't want to see you as a client. I don't like to see people in tax trouble.
Absolutely, and I think that that's one of the things that's very unique about somebody who does what you do, or similar positions and stuff like that, credit and the things like that as well. You hope that people take care of their taxes preventatively, like you said, so then they don't have to come to somebody like yourself who's a specialist and really helping people who have already kind of gotten in trouble. And that doesn't mean that you don't know the stuff to keep them out of trouble. Obviously, that's something that you talk about. But I always find that a weird vibe to have because you're like, I want to do what's right for my client, but if my client does what's right, then I don't have a client. You know what I mean? So, so tell me, I want to start off here. We'll end on this probably too, but I just love talking taxes with people because there's so many myths about taxes. And I want to start there. What is one of your favorite tax myths that you hear all the time?
Oh, my favorite tax myth I hear literally all the time is that rich people don't pay taxes.
Ooh, tell them.
Which
I'm
I
not, hold
mean,
on, real quick. Let me say, I said that like I'm rich. I ain't rich. I just want to be clear about that. They always say I ain't paying. No, that ain't me.
yeah, because I mean, um, people will give different examples, and I'll just put this one out here, still being politically neutral. People are like, well, Trump didn't pay his taxes, and I'm like, but if we actually looked at that tax return, our country like gives people huge benefits when they pay taxes elsewhere. So I guarantee you, he paid state, local taxes, foreign taxes. Like if you have investments or whatever and you pay taxes to that country where the foreign investment is, on your 1040 you get a tax credit for it. So I'm like, you got to know how to manipulate the tax code to work for you. So
Mm,
most definitely people will be like, "Oh yeah, like I started a business so I don't have to pay taxes." And it's like, that's not how that's not how this works."
yeah. And now you making my ears perk up there on that particular topic. And here's why: because I hear people say stuff like that, like I'm going to start a business so I don't have to pay taxes. I'm like, if you're not paying taxes as a business, you're not making money, and you should not be starting a business that doesn't make money. That's a stupid way to do anything. You're just going to pay. At worst, you're coming out of $160, a year. Well, here in Florida, I think that's what it is for most of the time for a LLC registration or whatever else. I'm like, that's not run your business as a business. And if you end up investing more money in the business so you don't take a profit, then yes, that can help you shield you for some taxes and everything like that. But you should run a business as a business. Don't run a business as a tax haven. That's stupid.
Well, look, you said stupid, not me. So I'm not going to use that word, but I agree with you. One of the main definitions that people just seem to like skip over is like a business has to be run with the intent of making a profit. Otherwise, it's just a hobby. Which, after the last tax reform, hobby income you have to report, and you can no longer report hobby expenses to like balance it out. So I always tell people like, be careful. Don't get your social media tax advice and not
Hmm.
talk to a real person. Like, yeah, I started an LLC. Because here in Kentucky, same thing. You have to pay to start the LLC. Every year you have to file additional forms, and now you have to pay this annual report.
Absolutely.
For what?
And I'll go ahead and turn the camera on myself for a second on that. And I have an LLC, and I originally signed up for a sales and use tax license for that LLC, which I ended up not needing. And so I'm like, oh, well, I don't need it. I don't think about it until that started costing me money. Because when you have a sales and use tax license, then you have to also report any of the taxes of goods you sold and things like that you may have taken like the license for. And so I would forget to file that because I don't use it. and then I would get billed by Florida Department of Revenue for that reason. So I'm like, yeah. So when you're doing it, like that's why I say when you're getting business and when you're doing tax and stuff like that, make sure you talk to somebody who knows what they're doing. And I have an accountant. He probably don't want me to admit that because of what I just admitted before that. But it's not his fault. I just didn't tell him what was going on and stuff like that. So when I did, he corrected me. But still, you know what I'm saying? Like, make sure that you're talking to somebody. Like she said, nobody should be getting all of their advice off of social media. Social media can be a catalyst to some real advice and everything like that, or it can even drop a tidbit, but then fact check it with somebody that you trust to give you that information because you never know who's out there on the internet giving you all these tax tips. I might start a TikTok today dropping tax tips and getting people in all kinds of trouble. Myself too, probably. So, oh man. So, what is unique? Would you say about the tax uh, laws in Kentucky that you really haven't seen happen elsewhere? And I know I'm not expecting you to know all 50 states' laws or anything like that, but just something that's interesting about Kentucky and maybe it makes it attractive for somebody to open a business there.
Ooh, you had me with the interesting to make it attractive. We
What?
have
Maybe
some
maybe
pretty
not. Maybe makes it unattractive. You know what I mean? That's a possibility too. I don't want you didn't write the law, so I don't want to hold you accountable for them.
Yeah, yeah. So we have some pretty cool depreciation rules here. Because we have a lot of miners in Eastern Kentucky, so
Hmm.
coal miners, and then for people that aren't familiar with the Kentucky Derby,
Yeah.
we have a lot of horse farms and stuff here. So one of the first things that I remember learning, like when I started a CPA firm 10 years ago, is like, oh, we're depreciating horses and things like that because like here in Kentucky, they're very valuable resources. Um, Really, in Kentucky, being a business owner, the tax liability part, that's not the main thing that I would say people need to be concerned about. It's just making sure you file all the different forms.
Hmm.
Because like we mentioned earlier, people are like, "Oh, I can't write any of this stuff off till I start an LLC." And they don't realize nothing changes at the federal level if you're a single member LLC. It's just now you got to turn in all this stuff to the Kentucky Department of Revenue.
Wow. That's crazy. Could you do me a favor? Go ahead and break down depreciation real quick. Just tell people what depreciation is.
Oh, yeah, absolutely. So, depreciation for a business owner is when you purchase an asset. So, anything that you can sell and make money off of. Um, the IRS does not let you expense all of that in 1 year. So, for example, let's say you are a real estate investor and you have rental properties. Well, even if you're able to pay out cash for your whole rental property, I bring that up because some people do. They
Hmm.
don't understand the concept of depreciation. Um, per the IRS guidelines, that home, you actually have to take the basis of it, which is like what you've put into it, what you're paying for it, and you depreciate that over 28 and a half years. Also, another strategy that wealthy people do use to help reduce their tax liability because let's say you have a person who can pay out cash for the home, well, they're still expensing it over 28 years. So they may have additional flows of income, but if you have this depreciation, depending on how much they spent for it, you have this expense canceling out all your other income and keeping your liability lower, even if you're not actually paying that money out at the time anymore.
And so I think what you finished on there kind of ties into the point you made before about rich people not paying taxes. So, are you familiar with the Millionaire Next Door?
Yes.
Yeah. And so that was one of the things that they found. And so again, I've mentioned this before on the podcast. It's a book. And what's funny is I mentioned that book a couple times. I never finished the book because I think it's highly overrated. But we can go on to that in a second. You know, we need to break that down. But one of the things they talked about in the Millionaire Next Door when they did the research about millionaires is that they did look at things like that. They looked at how to get the best advantages for their taxes. And that's exactly what you're
Hmm.
talking about is just making sure that you're doing what you can at your position. No matter if you make $1 a year or $1 million a year, there is a way to make sure that you're doing the best you can for your tax situation. And one of the things I always like to drop in people's ear real quick is that one of the best ways you can lower your taxes this year, max out your Roth IRA, or excuse me, not Roth, the traditional IRA, or max out your
Yeah.
401k. Max out your investment accounts that are pre-tax. That'll lower your taxable income, which therefore you pay less taxes on, and so on and so on. So would you say that investing in tax, excuse me, tax help and tax information is an actual investment. It's not just, oh man, I don't want to pay H&R Block because they cost X or what, blah, 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 blah. It's an investment in your future because once you set up your tax structure, that can help you for years down the road, particularly if you're an entrepreneur. Do you believe that that's an investment, or do you think it's an upfront cost for the cost of doing business?
It's definitely an investment, like you said, not just for entrepreneurs though, because I have some people that I've signed on in my business the past few years, and they are high net earners. So right now, like they're trying to figure out stuff to reduce their tax liability. But if they're looking at a strategy like investing in rental property,
Mhm,
let's say that to get their liability down for now, when that's paid off in 30 years, they're going to be making all that money and not really have as many expenses, right?
mhm.
So what I always tell people, because I'm like, well, can you give me advice on investments? And I'm like, no, I can tell you the tax implications, but like you want me to be the expert in taxes to work with your tax advisor, because for you right now, maybe you're in a high tax bracket now, but if you have all that money clear later, we don't have any type of taxes being withheld. You should probably consider investing in a Roth, because if we look at things like all the stimulus checks going out, all the PPP loans going out, taxes are going to go up.
Mhm.
So people won't have families in 30 years. And I mean like children living in their home
Yeah,
where
yeah.
they can't get like those additional child tax credits. And they're not thinking like, oh, yeah, I'm going to be a millionaire in 30 years. Well, we need to set some stuff up so that investment income you're taking out has already been taxed.
Mhm,
So, depending on what you want to do for the rest of your life, definitely it's an investment to work with somebody that's not going to just be around for like 4 months out of the year. And I've noticed people that will let you know, like, hey, I'm not an expert in everything, but I've partnered with somebody else.
mhm,
Um, I definitely let people know this is not a one-stop shop. Like I said, I'll tell you the tax implications. I have a few people I can introduce you to see like what's a good fit for you, because maybe you're not interested in real estate.
mhm.
Okay, like what else can we invest in to make it work though, to make sure that your overall tax liability stays consistent or low versus I save you money today, in 15 years you hate me because taxes went up and I didn't do anything to help you in the future.
Yeah, absolutely. And it's one of those funny things for me is that taxes is like a dirty word to people. People really don't like to think about paying taxes. They certainly don't want to have a bill come April or the beginning part of the year whenever you pay your taxes or if you're able to pay your taxes. But for me, it's one of those things that kind of exists. And yes, I'm definitely trying to take advantage of how to maximize it. But at the end of the day, taxes are around. You're going to pay some form of taxes. And if you're not, like we said before, that's because on paper you're losing money. Even if, so I want to say something real quick that I believe to be true. And I want you to correct me if I'm wrong. When you're looking at a company and whether or not how big their tax bill is, that is based off of profit, which one of the things that I think a lot of people get lost in, operations costs, which includes your employees' salaries, including your salary if you're paying yourself sometimes, is not considered profit. That's considered an operation cost. But I'm not sure if there's a limit on that. Does that sound correct to you? And correct me where I was wrong, and tell me if you do know, if is there a limit on your operations costs you're allowed to set as part of your business?
Yeah, so you are correct, like in differentiating between like the profit and the operating cost. Um, there is not a limit, but at the same time, you have to remember this business has to have the intent of making a profit.
Mm-hmm.
So, one of the examples that I love, people were all upset about Amazon.
Mm-hmm.
Amazon pays $0 in taxes. Then you had people popping up like, you can pay zero in taxes too. It's like, if we go back and look at their financial statements, we go back and look at different tax returns. One of the things that is similar to depreciation is research and development, except because it's not tangible, we call it amortization. They
Mm-hmm.
spent so much money in research and development that they couldn't expense it all in 1 year. So just imagine, like, yeah, they definitely made money, but if you're amortizing that over time, that results in not paying taxes later. So Bezos and the team, like, definitely made a good investment in finding accountants that were like, "Yeah, go ahead and blow that money now." so we can figure out like how to be number one in this later.
Yeah, and I think that's one of the things that it again ties back to that initial myth that you talked about with rich people not paying taxes and everything like that. I think that the way that a lot of these things are set up that way so companies can invest in themselves and grow, and then it's supposed to be the entirety of essentially that as a company gets bigger it brings more jobs, blah 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 blah, right? And it has all these different types of benefits for that company and for the community that they're supposed to support. So that's one of the reasons that they set the laws up this way. And so I think that's where it gets lost, because for every Amazon that you're saying is out there not paying taxes, not you but the royal you, um,
Yeah.
there's a million other companies who either A, didn't reinvest in a company and they stayed small and really local and they pay their taxes, or B, they did reinvest in the company and then failed. So that's, to be Amazon, you have to be successful and you have to reinvest in yourself and everything like that. And if you're saying that you believe that Amazon as a company or Jeff Bezos as a person should pay more taxes, what you're talking about is restructuring the tax laws. And again, that's political. I'm not necessarily going to get into that, but I just want to make sure people understand it's not illegal to do what most of these companies are doing. So if it's not illegal, that means they're not breaking the law, and that you what you actually have a problem with is the law and not their behavior. And I think it's just very important to keep those things clear, because you're getting mad at a company like Amazon or other people for doing what is already written, for what is already allowed for them to do. And there are certain things that you as an individual or you as a small business owner could do to do something similar. Now, will you ever be able to get to that level exactly? Maybe, maybe not. It really just depends. But I don't think we should be going into these things looking at them as tax shelters, or trying to evade the tax system. You're looking at the tax system existing exactly as it was written to, and then these businesses and everybody else maximizing their ability to do that. And I think that's one of the things that I see individual contributors, or excuse me, individual people who are taxed have an issue with, while not trying to do it themselves. And I again, if you have that earnest belief in your heart that I want to pay my fair share of taxes, here's why I'm not going to do these other things, and so be it. That's a moral stance. I can't talk
Yeah.
to that. That's a moral stance. You know what I mean? But if you're saying that Amazon and these people shouldn't be able to do this, and you're talking about changing the law again, political stance, not really going to have that discussion. But at the end of the day, if you're not doing what they are doing, you are. Well, let me say it this way: if you are not maximizing your ability to lower your tax rate, then you're not doing what the law is written for, and you're becoming one of those people who's paying a higher tax rate than you should be. So,
Yeah, and I was gonna say I think it's interesting because people get upset about that, but then they're not doing what they can to maximize their ability.
mhm,
Or they absolutely are and they just don't feel like it's as big of a benefit to them to max out theirs. Because I tell you right now, when like seeing the different amounts that were spent on like research and development, like yo, Jeff can have it. Cause I was like, that had to have been a big ouch, like as it was spent. And then like I was saying about like those properties, to not be able to claim it that year, so much that was able to carry forward, like he dropped a lot of money in research and development. Like we were talking about the operational cost.
mhm,
Research and development, he was providing jobs for somebody because he had to pay them to do the research and to
mhm.
develop the different systems and products that they have within that business. So, like, are we really upset because he spent that money to create those jobs and to develop his company? Or are we just upset because the end result for that year, he didn't pay taxes? And I'm sorry, not he,
Amazon,
Amazon.
yeah. What you get is
That's another thing too.
well, what's that? No, go ahead. Elaborate on that, please.
um, So for things like Amazon, Jeff Bezos, people are like, Jeff Bezos didn't pay taxes. No, Amazon didn't pay taxes.
Mhm,
Because if you're a owner of a corporation, you have those shares, I guarantee you they paid out nice dividends.
mhm.
Every stockholder, they paid taxes on those dividends. So if we look at like how much of a share he has of that company, he definitely paid taxes. And it's similar too with churches. So people are like, "Oh my goodness, that church is so big. That pastor he didn't pay taxes." And I'm like, "The pastor does. The
Mhm.
church doesn't." And especially like a lot of the ones that people want to like go after, they're authors, they're speakers. I'm like, "You have every inspirational book this person has written, and then you want to be mad because you think they don't pay taxes because they're connected to a church." Is like, "Nope, they're paying taxes on those royalties. Believe me."
Absolutely. And I think that's one of the things that, as you broke down there, and thank you for doing so, the difference between the company and then the individual. And as I said before, and you told me I was correct, so I'm going to run with it for the rest of my life. That's your fault now. Um, is the Jeff Bezos is an employee of an Amazon. So he's paid a salary, possibly bonuses, and like I don't know how he's completely structured, but he's paid from the
Yeah.
company, right? So the company pays whatever it pays in taxes, but then Jeff Bezos will pay income taxes. Probably has payroll taxes from the company and stuff like that. He's got Social Security, up to a point, and all the type of stuff that he has to pay into. So yes, he's paying taxes. And again, like, going back to the point I was making before, what you have a problem is the way that tax structure again is set up. Because I'm guaranteeing you, Jeff Bezos is playing. Excuse me, his effective tax rate is somewhere near the highest bracket. I'm guaranteeing you it's somewhere right around there because there's not that many tricks that he potentially could do to really lower his tax rate so significantly that he's getting down to what have to be like $400,000 a year or something. I forget where the tax brackets
Yeah,
cut
he's
out for them.
definitely making more than that, especially after the amounts that his ex-wife just gave in donations last year. Like, yeah, he's definitely in that higher tax bracket.
Absolutely. And again, I think we're looking at a fundamental shift in the way that we view these things, and I think that there is some form of change coming. And again, I don't want to go too far off the rabbit hole into the political sphere or anything like that, but I will say I personally am not a fan of raising tax brackets and raising the taxes on the rich, as they say. And the reason I say that is this: my base position when it comes to financial matters, whether it's governmental or personal, is you need to learn how to effectively manage the money that you do have. And so what you're talking about a lot of times when you're talking about raising taxes on rich individuals is that you want money for X program or X thing that we believe we could do with this tax money. So what you're saying is that money right now that we have in taxes is not being used to fund that idea. And that is the primary problem. If you have a spending problem, giving you more money will not solve your spending problem. That is not the way to go about business. The way to go about it is to prioritize the proper things with the budget you have. And then if you need more money, when you've already started to prioritize effectively, then you go out and get it. But I don't think we're at that stage. So, but
Yeah.
that's
I
just me.
agree with you though. Like, yeah, it doesn't make any sense. Like, we're gonna give you more money and like you don't know how to handle what you have.
Hmm.
So instead of us addressing that issue of not being able to handle money as a country, we're like, oh, we're gonna change this tax bracket, we're gonna tax the rich more, we're gonna tax these people more. And it's like, I need to be more effective with what you have first. Like, you need to prove your worth that we can trust you with this money. But yeah, not to go down a political rabbit hole, but definitely agree with that.
So, and this is an adjacent to politics rabbit hole that I would like to take you down next because I'm very interested to hear your thoughts on this. So, former President Trump, how was it, 2017, 18? I forget what year it was, but he enacted new tax laws that lowered the rates for a lot of people and stuff like that. Whatever. However, the one thing that I'm very interested in is the expiration of said tax law break, whatever, however you want to term it, that I believe comes up in 2024, 2025, somewhere around that time frame. I don't remember exactly when it is. What do you think that's going to look like? Because, and again, I don't know if you know exactly how it's written currently, but when it expires, is it supposed to go back to the original structure that it was when he changed it, or do they have to renegotiate the structure, or is there some balloon payment that we all should be looking out for? I'm just wondering what your thoughts are on if nothing changed, if let's say that it just went its course and then it ended in 2024, 2025, whatever the year is, and nobody made any changes to it. What does that look like, and from what you understand, when that ends?
Yeah, so what you're referring to is the Tax Cut and Job Act.
Hmm.
It's set to sunset in 2025. So if nothing is done, there are certain things that changed. For example, the standard deduction doubled. We don't have exemptions anymore. So it used to be you had a standard deduction and then you had an exemption for each member in your house. They did away with that and you just have that double standard deduction. So that's something that affected everybody, and people couldn't itemize, and they were mad. But again, um, in 2025, if our current administration does not decide to extend certain things will revert, but not all of it.
Hmm.
So one of the things that I really did appreciate in the tax reform and people getting started with business is the QBI deduction. So if you're not familiar, it was qualified business income deduction.
Hmm.
What that says is essentially for business owners, whether it be a sole proprietor, it could be a single member LLC, S corp shareholder, partner in a partnership. They can deduct up to 20% of their net income before they're taxed on it. So for the people that are just starting out, or for people who, like really took off during this pandemic we just had and were like, "Oh, I am a good entrepreneur." That means, let's say I was able to get somebody's tax or their income down to 30,000, okay? Before they're actually taxed at the federal level, instead of it being 30, it's now going to be 24,000. So
Mm,
that was huge for a lot of people. But what I've been warning people is, unfortunately, in our country, sometimes things aren't always logically thought out, and we
mhm,
just go in and undo whatever the person before did. If that goes away, I've been trying to help my clients like still put the money that they would have paid in taxes away.
mhm,
So like they're used to that. Um I think for bigger families, one of the things that I saw, it did hurt to not have those exemptions anymore, because if you have a bigger family, like let's say 5 children, which isn't as common anymore, but for those people to not have that extra 4,000 per child in an exemption, that
mhm,
means they're getting taxed on a higher amount.
mhm,
But the tax brackets also became a little bigger and lowered. So for example, a family like mine, it's me, my husband, and I have a daughter. With that standard deduction being doubled to 24,000, didn't really matter if we had exemptions, we were still about in the same place. Whereas I had friends with, like I said, 5 children, it was like, ouch, we're not getting as much of a benefit.
mhm,
So if people haven't been able to take advantage of some of the perks of it, um, I really hope that some parts of it are extended, like the QBI. Um, I think for sure people benefit from like the additional child tax credit. It looks like that's gonna be raised. Right now, it's currently up to 2,000. It'll be, I can't remember the exact number, but it's gonna be 3,000 something under the Biden administration if we can get it to go through. So, I personally, um, I was a fan of the reform.
mm. One of the things that I
Nothing to
found
do with the administration, but just the
understood.
reform.
I appreciate the clarification. But one of the things that I found interesting about the results, or the outcome, let's say, of that tax reform was that people suddenly became upset because they weren't getting as much income tax return. And I'm sitting here, I'm like, yeah, that's how it's supposed to be. You're not supposed to get a giant payment back in February, March, April, whenever it is, because that means you just loaned the government money for no reason. So, one of my crowning achievements that I'm the most proud about is that after paying my accountant, one year I came out with essentially $10 in income return. Like a $10 check essentially is what I made after paying my account. I'm like, oh, that's close because it was just enough to pay my accountant, but also I still made $10 because I want to get it to zero. I want to get it to right where I pay my accountant exactly, and his rates aren't going up. Not that I've heard, anyways, and we'll have a conversation about that later if they are. Not me and you, me and him, but um, but like that's what I think that's one of the things that I try to tell people, and you correct me if you have a different perspective on that. But you should be trying to minimize your income return because that means you paid really 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 close to what you're supposed to pay in taxes and not more, because if you pay more than that, that's why they give it back to you in some percentage or whatever, that time of year. That's because you gave them too much money. You don't want to give the government too much money. I don't want to go into too nerdyville here with the time value of money and all that type of stuff, but let's just say this: if I can make more in January to December and not get a check in February or whenever it is the next year that I file my taxes, that is what you should want compared to paying too much January to December and then getting a little check back in February or whenever.
Yeah, I agree with that. That was frustrating,
Mhm,
when trying to tell people, and again, trying to stay neutral, be like, okay, yeah, there are going to be pros and cons to anything, but like, let's take it for what it is, because filling out the W-4 got more confusing, and I had to let clients know this is to help you get as close to zero as possible.
mhm,
And the same thing you just explained, like people were mad because their refunds were smaller. And I was like, "You didn't realize, like, you had the additional $1,500 throughout the year? So, like,
Mhm.
your check was bigger." Um, but then for entrepreneurs, like, I don't ever wanna get a tax refund, like, that's money I coulda put in my business, like, why do I want
Mhm.
a refund? Um, so yeah, it's been very interesting, but again, we can't put everything on social media because people should fact check,
Yeah.
but people took different memes and things and ran with it. Because I was explaining to a couple, I think it was a week or two ago, and we're talking about filling out the W-4, and they're like, "Well, we usually get these bigger refunds." And I said, "Okay, this is what we need to change because," and when I explained it to them, they were like, "What?" They're like, "So stuff was tight last year and it didn't have to be?" And I was like, "Exactly, like, you get it. You can have your money throughout the year." Like, I know some people aren't good at saving, so, like, maybe they need that so they can go on their summer vacation, but if things are tight especially, like, this is working to your benefit. You don't want a big refund.
Absolutely, and that's I think that's one of the things that I always see people doing, and we've gotten so conditioned to it. Let me talk about myself for a second because I don't want people to be accuse me of talking down to people or anything like that. So, like when I was younger and I wasn't making any money, that tax income was something special because that was the first time you see that much money all in one place. You know what I'm saying? Like, because I'm getting, I don't know what the checks were at the time, $400 or something like that. Let's say every 2 weeks, and then all of a sudden I'm getting like a $1,200 check and you're like, oh man, now I can go do this, I can do that. And what you're really saying is that you should be getting a bigger check, first of all, because that's why you're getting the income tax return also. But you also should probably be looking at your actual career and trying to get something that allows you to put more money away, check to check, and everything like that. And then that's just, behavioral, developing those muscles to do that. So I think that's one of the problems is that if you take somebody like me or anybody really who's used to that system, as soon as we turn 15, well, I think did I pay taxes when I was 15? Do minors pay for taxes? Excuse me. Let me say it this way: do minors get a tax return? That's what the question is.
So they're probably working way too much if they get a tax refund, because that with that standard deduction, and for anybody that's not familiar with it, so the standard deduction is what every taxpayer gets, and if you're single, your first $12,400 for 2020 isn't
Mhm.
taxed. So for you as a minor, I think the standard deduction, like, before the tax reform was around 6,000, so
Yeah.
your parents would have taken your exemption. So, if you're making less than $6,000, like, there wouldn't have been a reason for you to file a tax return unless you had paid taxes in, because you would still wanna file to get a refund.
Yeah, and that, like I said, that was like 20 years ago, so I don't remember. I was just wondering out loud basically because I'm like I don't even know if I got a tax return back then. But let's fast forward a little bit. I'm 18 now, right? So I'm 18. I start getting a tax return. Now I'm 35 now. I'll be 36 in a couple of months. So for 18 years, basically, I'm getting a tax return. And now that's not true for me. I stopped for a couple of years ago for the most part. But for 18 years, I'm getting a tax return, and then a tax law comes in, and I'm no longer getting a tax return, and nobody explains that to me before it happens. That's where the outrage comes from, and I think that's one of the things that why people should be working with somebody like yourself. And I'm going to make a statement here, and I hope it makes your December really busy. I want you to be really, really busy in December. You should be talking to your tax professional in December because that's when you can go, hey, what should I do to potentially reduce my tax bill for next year? Because maybe you go, hey, I made good problem to have, right? I made too much money this year. Well, you know what? You didn't max out that IRA, or you didn't max out that 401k, or maybe you need to realize some losses on your stocks. Now that can get a little bit complicated there. I know you know what I'm talking about, but in December, that's when you can lock in what you're going to actually pay in taxes next year. And if you have the benefit to be able to do these things, there's certain things you can do to try to reduce your tax bill. So I want to have you, if you don't mind, touch on that last one I said there because that's one of the ones I a lot of people aren't aware of, and I've only been aware of for like a year or two. But if you have like you own a stock, and the stock did terribly this year, and until you sell that stock, the loss isn't real. So you look at your all your bills and everything like that, and you say, "Hey, my stock lost 5 grand. I'm a 5 grand over. That's going to cause me to get a tax return or something like that, or whatever." There is a strategy called tax. It was a man capital gain. Excuse me, capital loss realization. I think it is, or something like that, where you sell that stock to cancel that out. Did I do an okay job explaining that? I know you can do much better. I think that's basically how I envision
No,
it.
you did a good job explaining it. But because it's a passive loss, meaning, like, you didn't have to work for that money, there
Mhm.
is a limitation. Um, I think for last year, it was 3,000.
Okay.
So but again, we're talking about the Bezos, the Trumps carrying stuff forward. If you are limited to that 3,000, well, guess what? Even if you don't have a loss in the next year, that's gonna carry forward.
Mhm.
So it's like, you wanna make sure when you're working with a tax preparer, you're giving them everything because I would sit down and explain to you, "Okay, Brandon, you have this $5,000 loss. We can only use 3 this year, but you can have a little more fun if you wanna sell some for a profit next year because we still have this loss to carry forward."
Mhm. See?
Yeah, that the stock market has been interesting, especially last year, because the people that hopped in when it was low, but then got nervous and sold stuff, because you want to be careful and make sure you're talking with a professional as well, even if you're dibble dabbling in the stock market, especially because Robinhood Cash App has made it so easy.
Mhm.
When you make income on stocks, if you hold it under a year, it's taxed differently
Yep.
than if you hold it a day over a year. And a lot of people don't get that. They're like, "Oh, yeah, man, I made like 2,500 in the stock market last year." And I'm like,
Mm-mm.
How long did you own it?"
Maybe like 1,800. No, but so that was a question I had for you too, because I believe again, a lot of the things that I think I know, I like to have people like yourself on here who can correct me to my face in front of people because I like to be dumb in public. Is if I have that money in a tax advantaged account, let's say an IRA or a Roth IRA, we can get into specifics if we need to, if it makes a big difference to the thing, and I sell, but I do not pull that money out of that tax advantage account. If I understand correctly, I have not created a taxable event because it's still contained in the same wrapper of the Roth or the traditional IRA. It's only once I pull it out of there that I now have changed the tax advantage. Excuse me, the tax advantageousness. I don't know. I'm making up words now, which means I'm probably wrong. But I've changed the tax structure essentially once I pull it out of the account. But as long as that sale stays in that account, then it still hasn't created a taxable event. Is that correct, or am I still going to get taxed even though it's in that same account?
So for the scenario that you gave, yes. But people take that and they mess up because they're like, "Oh, I did my IRA, so I'm gonna do it on Robinhood too." It
No.
doesn't matter if it's in Robinhood.
Mm-mm.
If you sold it in Robinhood and made a profit, they're gonna send out a 1099-B and you're gonna be taxed on that. Because I've had a lot of people tell me that too. They're like, "Oh yeah, well, like I sold it on my Fidelity account." And I'm like, "Okay, Fidelity, they might manage your IRA too, but if you have your own brokerage account where you're selling stock, it doesn't matter if you pulled it out of Fidelity, you still sold it. It's not protected in your IRA." So the scenario you gave, as long as it's your advisor or whoever is managing that within your IRA, it stays in the IRA and you don't have a distribution, we're good. If you're on your Fidelity platform and you do it yourself,
Yeah.
we're gonna get taxed on that.
And so again, just to be clear about what you're saying here, I have Fidelity. However, it's my 401k. So it's not Fidelity specifically she's saying and everything like that. And I know you
Yes,
didn't mean that.
I
It's
just use that for an
specifically
example.
whether it's a taxable, excuse me, a tax advantage account or a regular trading account. And I don't think Robinhood has IRAs yet. I don't know. I never
I don't
used
think
Robinhood.
so.
I never will use Robinhood. It had nothing to do with what just happened. I just don't I don't use. I'm not a day trader. I'm an index investor and real estate. Like that's my strategy, right? I don't day trade, so I don't need anything like Robinhood. But so if you're keeping your money in an IRA, no matter who holds it, Roth or regular or 401k or any of your tax advantage accounts, HSA is another one. Oh man, I love HSAs. By the way, let me shout out that every time I get a chance, I want people to learn about HSAs. If you can get an HSA, get yourself an HSA. I love HSAs. But anyways, nerding out for a second. That's a health savings account for those who don't know. But anyways,
And
uh,
FSAs, the flexible savings accounts, those are good too.
I've avoided FSAs thus far, but we can definitely get into that a little bit too. Maybe you can change my mind. But for me, I stay in HSAs because they allow me to invest, and then you put it away. And then the one thing that I love about HSAs is, to the best of my knowledge, they are the only triple tax advantaged account, meaning that you don't pay taxes on the money on the way in, you don't pay taxes on the money that grows in there, and if you use it for medical expenses, and I think there might be some other ways you can get it out of medical expenses as well without paying taxes, but you don't pay taxes on it when you spend it either. it's the only money that I'm aware of that exists in that same triple tax advantage status. Because Roth IRA, you pay taxes before you put it in. Traditional IRA, you pay taxes when you pull it out. Same thing with 401ks and everything like that. Which means you pay taxes on the growth as well. But with HSA, none of it. All of it is taxable as long as you use it on medical care, and that's just beautiful. Love it.
And you have to prove that it was medical care.
Come on, man. You know that I need these shoes for my back.
Look,
These limited edition Air
you
Maxes are for my back. Don't do
you
that.
actually gave an example that I've heard before, except it wasn't for their back. And I was like, I need a doctor's note. I need like I
Mhm.
can work with you, but you gotta be realistic here. Can't be from the Nike outlet. Like,
Absolutely. So one of the things you kind of brought up to me before we got on the air, and I was really, really interested to see what you meant when you said this or whatever. You said some people might be potentially in for a, I don't want to say a rude awakening, but a shock of how an unemployment has affected their tax situation. Can you explain what you meant by that?
yeah, absolutely. In this part, I I can't really blame social media all the way for this one, just because everything that went out last year as a benefit, people were calling free money.
Mm-hmm.
So the stimulus, we're not getting taxed on that. There was an advance credit that was created. We just got it early if you were eligible to get that. PPP loans could be forgiven and become a grant. Unemployment is always taxed. So I've seen people made 14, $16,000 in unemployment and didn't have anything withheld.
Mm,
So if you did work part of the year or you picked up another job, you don't have anything withheld from that additional, let's say $16,000, okay?
mm,
What that does, it adds to your ordinary income. So we're going to add all that up and you're going to be taxed at whatever level that ends up being. So I'll give you an example. Let's say we had somebody that worked till March and they made $10,000.
mm,
We got $16,000 in unemployment. Then at the end of the year, they got an awesome job where they made another 20.
mm,
So we got $56,000 here. If they'd only made 16, they'd be in the 10% tax bracket. But we have to add all of that up, and
mm,
now they're not. If they're single, they're paying 20 something on it. Well, here's the kicker, because they had 3 different sources of income, even if they filled out that W-4 properly, none of those places are accounting for the other income.
mm.
So like I mentioned earlier,
Oh
that
yeah.
standard deduction, 12,400, job you made $10,000 at, they didn't withhold any taxes because it doesn't look like it's necessary. You didn't have anything withheld for the unemployment, so that's 16 right there. Then 20,000 that you made, only the last, what is that, 7,600 had tax withheld, and that's gonna be withheld at the 10% rate.
Mm.
So what did what did we just do there? We very grossly under withheld for taxes.
So.
But something interesting, it's been proposed that only the first 10,000, or no, the first $10,000 of unemployment may potentially not be taxed this year, which is
Mm,
one of the things after last year, if I decide to do preparation the rest of my life, I'll have a job forever. Um, because they made so many changes to the tax law that apply to that year. So as tax preparers, we're just kind of like, what in the world? Like, go ahead and say what you got to say because I know when this airs, tax season will have already been started. But right now, we're a few days before the opening, and we don't even know if unemployment income is going to be taxed fully or not. So, with all the different changes, unless people have like straight W 2 income, probably need to talk to somebody else at least just for this year.
yeah, and just to add on one thing you said there, and if I'm mistaken, please always feel free to correct me. A single W two, because even in your situation, they have W two, but that's two different W twos. It didn't take the other one into account, and then you added in the unemployment as well. So if you have a single W two income and that's your only source of income, generally speaking, things are relatively simple for you. But if you have multiple W twos, maybe you got a maybe you got a promotion to another company, maybe whatever else happened, you should always make sure you're working with a tax preparer, preferably in December, as I said, or earlier is better than later because you want to see what you can do to try to help yourself. Because once you're January and on, now they're just telling you what the situation is. Really, there's not anything you could really do. Well, actually, that's not true. IRAs are April to April, right, or something like that.
That's correct.
Yeah, yeah.
And I tell people generally I'm talking to my clients around October,
Hmm.
November, because if we have October, I have at least 6 pay periods where we can play catch up. And then with that too, I actually just did a blog post and I told you earlier, like sometimes I talk in taxonese and I don't realize like what I think everybody knows, they don't know.
Hmm.
So, I did a blog post that actually breaks down with the, illustrations and everything, like how to fill out your W-2 if you have multiple wage earning house
Hmm.
or if you're married filing jointly. Because a lot of people get married and they're like, "Oh, yeah, we got all these tax benefits," but then they both fill out their W-4 as, married. So
Hmm.
both of their jobs aren't withholding any taxes until they start making $24,000. So same scenario as I mentioned earlier, they're grossly under withholding because they didn't read the whole W-4.
That's crazy. You know what's funny? Uh, People commonly think, or at least I did, until recently, that marriage is a better tax situation. And it is for a lot of people. But I just learned so there's an app called Blind where a lot of people go on there and anonymously post about their job and they talk about a lot of stuff on there. It's a lot of Silicon Valley engineers and stuff like that who so high net worth, and it's going to be a high income earner type of people. And I wasn't aware though, and I looked it up after reading a post on there. There is basically a high income earner marriage tax, and what I mean by that is that for most of the tax brackets, when you get married, they just double it. You know what I mean? Like they basically double your bracket or whatever it is. It's a little bit more complicated than that, but that's basic how it goes. But that only happens to a point. Once you both start making a lot of money, or maybe one of you makes outsized of the other one, it no longer doubles. And now you're not getting double the income anymore. You're getting like a percentage, or maybe like 1.5 or whatever it is. I haven't done the math, but that was crazy to me. I never really realized because, for first of all, I'm not looking at those brackets. I wasn't really concerned with them. You know what I mean? Like, maybe I need to be concerned with them in a couple of years if I hit the lottery or something. But I thought that was crazy. Like, so what you're talking about there is that just because you're married doesn't mean the tax bracket has gotten simpler and automatically benefits you. The thing you mentioned and the thing that I just learned, like, there are still complexities to it, and you need to make sure that again you're talking to your tax professional. Do not One tip I'll try to get to anybody who's trying to build a little bit of wealth. I'm not talking about Jeff Bezos money. I'm not even talking about Oprah money or Jay Z money or who's somebody who's only worth like $1 million. I don't know. Somebody who's worth $1 million money. Like you're only making, you're only trying to build your wealth to a couple 100,000 or something like that. You definitely should be talking to a tax professional, in my opinion, multiple times a year. It shouldn't be a one and done. You should call them up and talk to them a couple times a year to make sure that you're doing what you need to do for you. Like I said, because you could find yourself in some trouble, like she was just describing. You could end up with a tax bill on the first $24,000 you made it the year you got married. And I don't think a marriage, the first year or two, whew, I'm not trying to have those
Yeah.
problems in the first year of marriage.
And there was one thing, so you said tax brackets. I'm gonna go back,
Hmm.
the tax nerd part of me. So the brackets don't double excuse me, the brackets don't double, the standard deduction doubles. So let's say you have a spouse, but like it makes sense for it to double. Really,
Hmm.
you're not seeing a benefit unless only like one spouse works. So I give an example. Let's say that we have two individuals that make $50,000.
Hmm.
Okay. The standard deduction should be 24 because if they were single, it was 12.
Hmm.
So people are like, "Ooh, yeah, we got this tax advantage." Um, for married filing jointly, you get to stay in lower tax brackets longer. But like you said again, only to a certain income level.
Hmm.
People don't realize like once you hit a certain income level, things start phasing out.
Hmm.
So for example, like I had a couple, they're making roughly $200,000. So we have things like the student loan interest deduction. Couldn't take it. Throw that out. That people are like, oh no, we can't take that anymore. We want to file separately. Well, when you file merit filing separately, you lose some of those advantages,
Hmm.
like the student loan interest deduction, um, child care expenses. You can't claim that anymore if you file married filing separately. But at the same time, now that we have your income combined, you can't take all of it anyway because you're way past this income threshold.
Mhm. And like I said, this stuff is very, very interesting to me because we talked about, I think a little bit before we got on the air. I don't think it was on the air, but anything that involves me and my money and keeping more of it or making more of it generally is going to make my ears perk up. I'm listening. You got my interest, but I know taxes for a lot of people is just boring. But I just it's hilarious to me. So let me drop something else that you wanted to talk about that I think will make people's ears perk up again because we talk about stimulus check. So there's been a lot of confusion about this second round of stimulus checks. First of all, calling a stimulus check is strong. I think it's like stimulus food stamps because it's $600. I mean, come on, man, for like a year. But again, we'll stay off that. How can people get their stimulus check if they haven't already got it?
Okay. And this is another one where I'm like, yeah, as a preparer, if I just want to prepare taxes forever, I'll have a job because it was approved. That second stimulus was approved December, right before tax season started. We got people now like, hey, I still haven't got my stimulus, or they had a baby last year.
Mm,
Babies are expensive. Am I going to get that money? If you haven't received the second one yet, or even the first one, you will be able to get it still, but you have to file your 2020 taxes.
mm,
They have a rebate recovery credit. So essentially, this credit was created, and the stimulus checks were in advance of it.
mm,
So it's going to reconcile back on your return and zero out if you did already receive the stimulus checks. Now, if you didn't, it's not going to reconcile and it's going to show that the IRS Treasury Department still owes you money. So
mm,
people will get that back with their refund. But here's the thing that I like about it, and people are like, "Oh, they're just tricking you. They're going to take it back." Even if you owe for 2020, but you didn't get your stimulus check, they'll still send it to you with the information provided on the return. Um, Also, if you have a prior balance, they will still give it to you, which I don't know if you're familiar. I don't know if you've ever owed before. But people who have a previous balance when they file, if they get a refund, don't get too excited because IRS is going to take it.
mm.
So the only thing that can intercept your stimulus check is if you have back child support.
Gotcha.
So I've used it. I know it's not a joking matter, but I've used it for some of my younger taxpayers. Like, I didn't get my stimulus, and I'm like, well, you got some back child support you got to pay, and they're like, oh my goodness, like, no, ma'am, no, ma'am. Like, well, you're in good shape then.
Yeah. And so I'll say for me, I have not owed yet. I imagine that'll change sometime in the future potentially, but maybe not. If I'm smart, maybe I can keep it at, like I said, I want to hit that zero. One of these years, I'm gonna hit zero. That's my goal. But anyways, and I do not have any back child support. If I do, it's a surprise to me, and there's a lot of calls I gotta make for sure. Because not only did I not know I owed child support, I didn't know I had a child. So we got a lot of questions going on. But um, anyway, so I told you before, I've got a couple side hustles. I've really let them die down over the years as I've gotten older, just because I just don't have the passion or the energy really to them. I'd rather do something like this, which ultimately could become a side hustle, something like that. So what are the things that you see for people who have like other income streams that aren't just a W-2 income stream that usually gets them in trouble or that kind of surprises them?
Oh man, how much more time do we have?
Bro, we got all the time you need. I'll chop this episode up into like 20 parts we need to. Let's do this.
So, one of the main things that I see for people that have side hustles, or even, I won't just say a side hustle, if they have something that they want to do full time and they quit their job,
Hmm.
they don't realize that we are on a pay as you go tax system. So, you
Mm,
work your W 2 job, you may go exempt and not pay into federal taxes, wouldn't recommend it, but you may do that, but you don't have the option to not pay Social Security and Medicare.
hmm,
Same thing when you have that side hustle or you become an entrepreneur full time, you have to pay into Social Security and Medicare. And the IRS expects you to know that, and they expect you to pay that 4 times a year,
mm,
once each quarter. So what I see a lot of people that pick up the side hustles, they have no idea. They're just like, oh yeah, like I'm doing Lyft. I got all this extra money. They don't take any taxes out. Woohoo! It's like, ah, even though you don't officially have a business, when you get that 1099 and you have to file, the IRS is looking at you like a business. So, like I mentioned with the Social Security and Medicare, it shows up on that individual's tax return as self employment tax.
Mm,
And people are like, well, what is this? Self employment tax is the entrepreneur's contribution to Social Security and Medicare. Now, if they ever get to claim it later, if it's still around, that's a different story. Won't go down that political rabbit hole.
mhm.
But working your W-2 job, one of the things that you don't realize is that you're paying about 7.65% of your
Oh, no, no,
income
no.
to
Let me stop right there. Oh, I'm aware. I'm very aware. So
let
I
okay, let me
realize
go back. General you, Brandon knows. General
I
you,
see that money coming out the check.
general you. You're paying about 7.65 to Social Security and Medicare. What you don't see on the flip side of that is your
Mm,
employer is also contributing 7.65%.
mm,
So
mm,
when you have that side hustle, you become that entrepreneur, the self-employment tax isn't going to be 7.65%. You're paying 15.3% now. So, congratulations. Now, on the flip side of that, people will be like, "Oh, but I mean, you get to deduct half of it cuz like an employer would." It's like, "Yeah, in order to have a tax deduction, you had to have paid it."
mhm.
I would much rather just pay the 7.65 versus paying the 15.3 and getting to deduct part of it. I don't know about you, but I would have rather not paid that out. So, what I see for people, that really hurts them because they don't realize that with that side hustle, they're like, "Yeah, I only made $3,000." Well, self-employment tax kicks in your first 400.
Mm,
So, I've had people who they only do their side hustle now because, maybe with COVID, they lost their job. So they're like, I had a bomb year, but I only made 15,000, so I know I'm not going to have a lot to owe in taxes. Well, at the federal tax level, you're only going to get taxed on about 3,000 of it. But these self-employment taxes, and that's really where I see like a lot of people, they're like, "Well, I didn't make a lot of money, so I didn't feel like I needed to talk to you because it's not a lot." It's like, but you didn't know about the self-employment tax, and now you sitting here with this bill that you can't pay. Because I mean, when you first start out entrepreneur, unless like you have a rich uncle or grandpa or something, like
mhm.
you're bootstrapping it. So like you don't have that put away for taxes if you haven't been taught that you need to do that. So that's definitely the number one thing that I see new entrepreneurs or even people with the side hustle do.
Absolutely. And like that's what I say. You should be friends with your tax people, man. Like they really, really, really help you out. And let's be honest, you could do that. What's it called? The easy. What's the form? I don't even know. I never fill it out. I'm never filling out my own taxes in my entire life if I can avoid it because I don't need that risk. It's just not worth it. You know what I mean? Like you're gonna pay somebody whatever a couple $100. I don't know the variance and the rates that people charge for it. I have not shopped around a ton, but you're going to pay that to protect yourself not only for this year but for future years. Because let's say, and again, I want you to jump in because I don't know much about audits, but if you get audited they can go in back years, right? They don't just have access to that current year. So if I did my taxes 5 years ago, then suddenly started a startup and started making millions of dollars, it may go back and they look. I'm not trying to get hit for them 5 years ago when I was doing my taxes because I was being frugal or cheap or however you want to term it. But like, bro, just I'm just saying, tax professionals are some of the jobs that I don't want to do, and so anybody who does them, I love it. I love it. I love you as a profession. You could do what you got to do, and I recommend anybody who's trying to protect whatever little piece of money they have, whether you're making $1 or $1 million a year, talk to your tax professionals multiple times a year and make sure that you know what you're doing with your money and that they know what you're doing with your money, so your team can come together and make everything work. That's just simple advice for everybody. You know what I'm saying? That's no specific tax advice except talk to a tax professional about everything, anything. I call them all the time, but no, but uh,
Yeah, but you're right, because people have this misconception that like, oh, the IRS only has like 10 years to collect. And again, that's just a piece of the truth.
mhm,
They have 10 years to collect after the tax is assessed. So let's say General you, not Brandon, because we know Brandon pays his taxes and files. Let's say General
allegedly.
you Allegedly. Let's say general you didn't file your 2009 tax return. And like you said, once you start making money, you kind of have a mark on you. Well, if they didn't send you a bill, they didn't assess the tax, they can assess it right now because the clock does not start until it's assessed. And then with that, if they think you did something frivolous, they can go back even further. There's no deadline or extent if they are suspecting you did something frivolous.
Well, I am known for frivolity, so I can say that I probably did, particularly in 2009. But 2009, I was still having my mom file my taxes, and I say that not as a mama's boy. My mom worked for H&R Block, so I mean, it just made sense.
Oh, cool.
So you know what I mean? It was like $20, and I'm cool with that. But now that the pictures got a little bit more complicated, like I said, I do go to a full service CPA and everything like that. So he takes good care of me. If you're in the Tampa area, shout out to Zachariah CPA Group. But if you're in Kentucky, no. So that was a question I wanted to ask you too. Do you only see clients in Kentucky, or do you branch out from there as well?
No, so I actually do branch out from here, which is really cool. So I mentioned before, I'm an enrolled agent. So my license is through the Internal Revenue Service. The difference between me and a CPA, well, for one, with my license being from the IRS, my specialization is tax. My whole test I took was on tax representation, preparation, planning. And I chose to go that route because I was an extreme accounting nerd. Like in the business school, you have the accountants that are weird, and within accounting, they kind of look at us tax people like, you guys are weird. Like, who wants to do that all the time? So when I fell in love with taxes, I was like, dang, I'm one of those people. But I knew that I wanted to be able to represent clients before the IRS, and the CPA exam, only about one eighth of it deals with taxes. And
Hmm.
people don't realize that. So with the EA license, I can represent clients in all 50 states if they're in tax trouble. Whereas like a CPA could, but then because you're licensed through the state, you may have state limitations. So I actually have clients in California, North Carolina, have some down where you're at, in New York. So that part's been pretty cool. If they're in tax trouble, of course, I'm only helping them at the federal level because learning all those state laws definitely
Yeah.
like relying on my team because each state gets to set their own rules. But fortunately, down where you're at, there's no state income tax, so
Indeed, indeed. And it's been so I've been here so long now. And then I was military before. So I was military in Georgia, and Georgia had the same thing. And then Ohio, he did it as well for because I was registered to vote and everything like that. Excuse me, Ohio. So Ohio had a military thing where I didn't pay taxes. So I haven't paid state taxes in like 20 years. And that's not me evading it. So don't try to come audit me. That's all legal. That's because, again, Florida has no state tax. Georgia had it, but I was military, so it didn't count. And then, like I said, I left Ohio when I was like 20. So, so wow, yeah, 20 years is way over exaggeration. It's like 15, but anyways, but yeah, it's crazy to
Kentucky
me.
has the same benefits.
Does it? Oh, that's awesome.
Yeah, so I have clients that are National Guard and no state income tax on that income.
What's crazy to me is not even the state income tax is that there's also excuse me not just state income but just state tax in general, but there's city tax too, and I forget about that because it's been so long. But we're going to move away from here probably in a couple of years or something like that, and that's something I got to look at and make sure because I don't know what the Georgia laws are anymore. And now that I'm not military, what does that look like for me? So because that's probably where we're going to end up. So state city taxes are just something that's crazy to me, and that's why they talk about like NBA stars or NFL stars or whoever else that your $100 million contract, $50 million, whatever the size of the contract is worth more in Texas than it is in California. And that's like it's
Yes.
wild how true that is.
Then something else that with you bringing that up, I always tell entrepreneurs like be careful if you offer a service because now pretty much people are used to working virtually. But let's say I'm helping my client in Nebraska and I actually fly out there and I'm working.
Mhm.
You bringing up the NBA stars is what made me think of it. If you look at like what they get paid and where they're playing, they look at like how much they made those different games. And let's say I'm originally from Indiana, so I'm thinking Pacers. Let's say you played 2 games in Indianapolis, okay? Indianapolis wants taxes from that money you made that night.
Bro, that's crazy. That's
So, like,
crazy.
Their accountant's like, "Yeah, managing the money." I highly doubt that the accountant for an NBA star is the same person that's doing the taxes,
Yeah.
because there's just so much different stuff you have to look at, and even, like, that accounting firm or whoever, if you look at all the places they play, and then if you look at something like WNBA and, like, they're going overseas and stuff, like,
Mhm.
that's a tax field day, though.
But
Like, "Look, I gotta charge you for all these little local forms you had to do."
well, and here's what I talked about recently too. So I used to have an Amazon business. So I mean, I still do. But and what Amazon did there was a time for e-commerce was not taxed at like a state level. They did not tax it. Well, they eventually a lot of states fought that, and I don't know if they changed it federally or where they changed it. But long story short, they changed it so like Amazon being the big one that they're looking at, of course. Now there are taxes due on the items that you buy, say from California, say from wherever else and stuff like that. But what they did is Amazon, first of all, isn't paying that. They pass it on to the third party sellers like myself, right? But then what it gets even more complicated is whether or not you have, I believe, what's called a nexus to that state. And so what that means is that your item is either stored in a warehouse there or spent, I don't know the timeline, but it was there for like more than like just passing through or something like that, right? Like, so if it was stored in a warehouse there, or if you shipped it to a warehouse there and stuff like that, then you owe taxes from that state on that item you sold. And then also potentially wherever you sell it to, the person lives as well. So there's just all these craziness that goes into that stuff now too. And it's just like, man, that's what I say. Your career is never going away. You're never going anywhere. I know
Yeah.
that.
I do not service as far as with the preparation part,
Mm.
e-commerce clients. Because
Well, this is over. I'm not
you
doing this.
mentioned Amazon. South Dakota versus Wayfair
Mm.
with that sales tax. Because the thing about it is you mentioned states. We have certain states though that have different sales tax rates within the state in different cities. So like you mentioned, and people don't realize at state level, no two states have the same tax laws. No two states or different localities, like they may have the same percentages, but they don't have the same tax laws. So your sales tax, where I'm at in Louisville, I'm hop, skip, and jump over from Indiana. If I go to Indiana, I'm paying 7%. I'm here in Kentucky, I'm doing 6%. Because of how close I am, you have people who live in Indiana that are selling over here. So you have to watch that threshold. Because for certain states, it may be, I think it's 200 transactions or $200,000. So people are like, oh, I'm not worried about that. But then you sell in this other state who has a rinky dinky
Mhm.
threshold. And they're like, yeah, you sold $50 here. We want our sales tax. So, e-commerce, anything that's good where people can make money easier, the IRS, when they figure out how to tax it, or the state, they're definitely going to get you for it. That's why I'm waiting. I was like, as soon as they figure out how to legalize cannabis, that's because they figured out how to tax it.
Well, and that's one of the things that's interesting about, and again, not to go off on tangent, but that's just a very interesting point you brought up there too. If I understand correctly, and you again correct me where you have a different understanding, currently cannabis sales are not federally taxed because the federal government does not recognize it as legal, and but they do. I think it's a weird tax structure. Let's just say that because I don't want to get into all the ins and outs of it because I don't know all the ins and outs of it. But I've seen a lot of that, or read articles rather, I should say, about a lot of those companies who have that. They're like putting a bunch of that money away because they're like, we don't know when that tax bill is coming, but we know there's no way that tax bill isn't going to come at some point, and so they're trying to protect themselves and prepare themselves. And then you may see some other ones who are living a bit little, like you said, would you say frivolous before, where that tax bill comes and whoo, suddenly that company is out of business. They sold to somebody else. You know what I mean?
Yeah, but yeah, so right now the IRS, because their whole thing, even if you're participating in illegal activities, you should still pay your taxes. And it's like, what?
What?
I mean, on the flip side of that, though, if you're not paying your taxes, that's how they're going to come get you. If we look at like Al Capone,
Yeah,
they got
the
him on
poster
tax
child.
evasion.
Everybody goes back to that because it's such a good representation of that.
Yeah, so where people are getting in trouble in that industry, and it's really cool because I have a friend like she specializes in that. I did not realize like there are so many more rules for the
Mhm.
cannabis industry. IRS definitely wants their cut because states aren't seeing it as legal yet. That's where people are going to get in trouble like later. But I think it's going to turn into something kind of like cryptocurrency. So
Mhm.
for the longest, because they weren't reporting to the IRS the different, I guess, brokerages and different things like that, they weren't reporting to the IRS. Well, people weren't saying they made money with crypto. They didn't have to. But like I said earlier, you not putting something on your tax return is considered frivolous. So they can go back as far as they need to once they figure out how to tax it, like track those records. So I've
Mhm.
been telling people like, "Hey, you do crypto, keep your records because these brokerage places aren't required to report it yet." Of course, we know Coinbase got in trouble and like they do, but all of them aren't regulated yet. So I think as soon as like that's regulated, as soon as cannabis is regulated, because why that industry, if we look at our neighborhood cannabis people or big companies getting in, there's too much potential for the government to make money. So they're going to figure it out. And then we're going to have all these different cannabis dispensaries everywhere,
One of the things that I
in
think is
my opinion.
interest Yeah, of course. But I think one of the things that's just funny to me, this isn't a serious thought at all, but it is true, and it's going to be hilarious to me because of what Oregon. I don't know why I said it like that. That was weird, but because Oregon just legalized all drugs, the government might get some money from crack. They're going to get a crack tax, and that's wild. Because you're right, the government, once there is a money making business or industry or whatever you want to call it that exists outside the current tax structure, they're going to find a way to get in there. And so, because of that, there's got to be somebody who's about to flip some legal crack or something like that in Oregon. And so then the government's like, hey, we saw you moving that 8 ball. We go ahead and need a little piece of that. That's just wild. That's wild that that's
It's
a possibility.
crazy. Yeah. That, but I wonder what that's going to look like because,
Mhm.
like, for so long, we've had, like, this bad, like, stigma around marijuana. So,
Mhm.
I was in California this past, October is fall, this past fall, and, like, I was intrigued because my friend who, like, specializes in that, it was like you're not from here, I was gonna name a certain mall or store, but I felt like I was in a, like, high-end jewelry store. The way, like, everything was on display and the security, and I was like, "Isn't that still just weed?" Like, I don't I don't get it. So, I think it's gonna be people are investing too much money in it. So, like, the government, they got something coming down the pipeline,
Uh,
in my opinion, again,
and
for
this
them to tax it.
and this is where I go again, right? Like again, just to tie the nice little bow on this, because I know you got to go. And thank you again for spending so much time with me breaking all this stuff down. I do really appreciate it. Uh, they they have to recognize it as legal so they can start getting their tax hooks in there and everything like that. I do think that that's coming. And then so when you're talking about wanting to tax higher percentages on the rich, and you're wanting to tax, make sure the businesses are paying their taxes, stuff like that, or whatever. This is like, how do you not see that the drug industry is a huge one? Like, let's take it off the table and say drugs, because that can have a bad connotation for certain people. But marijuana, just marijuana specifically, yeah, it had a bad stigma. Which, again, if you want to go conspiracy theory, or I think it's actually just fact, I don't even know how much of a conspiracy theory it is. It was directly related to the hemp, and hemp was a superior product in a lot of ways to cotton, and blah 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 blah. Blah, right? Long story short, the government doesn't care about any of that. The government is going to say, hey, that is a way for us to make additional tax revenue that we are currently sitting out on because we're trying to hold some stance. And what they did is they let essentially the states beta test it for them by not taking a position. They go, we're not going to say nothing. We see what you're doing. Technically, it's illegal, but we don't. Like, when does the government not step in with something that's illegal that they see happening right in front of their eyes? I'm guessing when they
Exactly.
have some kind of plan for it or something like that. So I think you're right. I think there's going to be a lot of tax coming on that, but it should still be a groundswell of marijuana startups that you're going to see exploding. They already are in a lot of places, but then every time one new state decriminalizes or legalizes or whatever they do, which I believe here in Florida, last year, a couple of years ago, I don't know, I don't pay attention to that stuff. They made medical marijuana legal. It's decriminalized in a lot of cities, so it's not legal in a lot of places, but it is decriminalized. So it's just, again, getting all kind of
It's
complex and stuff.
weird.
But what is which is like I said, which is really interesting in states like Florida, because Florida has no state tax. But I do believe they have some kind of fee for running like that type of business or something like that. So it's just, again, it's going to be a huge money making scheme for the government. And when I say scheme, I shouldn't say that because I don't mean it in a nefarious way. I simply mean that is how you increase your tax dollars right there, by making marijuana, which, again, the stigma has largely been reduced. There's tons of research behind it. There's all these different things. Go ahead and make it federally legal, and then start taxing it. Boom, there you go. I don't want to hear any more about Jeff Bezos being taxed when you have this multi-billion-dollar industry that all these companies are starting to pay taxes into, and then hold your congressmen and women accountable for how they actually spend that money, because that's the big part of it, right?
Yes.
So
You
before
ended
we
that perfectly.
yeah. So before we go, I want you to do two things for me, please, real quick. One, I want you to leave everybody with one last little tax tip that you like to drop off for people. And then second, do you think that Bowens Tax Solutions is the best place to find you? Do you have anywhere else you want people to come see you at? I'm going to drop some links in the comments and excuse me, the notes of this and everything. But I just wanted you to give yourself a chance to tell people how to find some more of you and get some more good information, especially this time of year, because maybe they're looking for those tax professionals that they need. And hey, they just met one.
Yeah. So Bowen's Tax Solutions, depending on how you like to consume content. So I do have a blog that you can find on bowenstaxsolutions.com. And that's actually where that blog post is, like how to fill out your W-4 properly.
Mm-hmm.
So definitely as people are getting their W-2s and they're like, I don't think I had enough withheld, go check that blog out, turn in a new W-4 to your employer. I'm also on YouTube as my name because I know some people like to read, some people like to watch their content.
Mm-hmm.
And then also Instagram. So Instagram, I am my name. I'm trying to look at my background. Sorry, it's Timalyn S Bowens.
I got you. And like I said, I'm gonna drop a note down then for everybody because you gave me those links, so I'll make sure I post them in there. And so just leave everybody with that one little hot tax tip you got before we get out of here.
One that I think affects everybody is to do withholding or estimated tax payments.
Mm,
Like you have to know your tax liability before it comes. 'Cause I have people tell me all the time, like, "I never have a tax liability." It's like, yeah, and if you get a refund, that doesn't mean you didn't have a tax liability, it means you paid too much in during the year.
mm.
So, understanding that tax liability and withholding, or for, like I said, entrepreneurs, those estimated tax payments.
Outstanding. So thank you so much for coming in here and sharing this news. And I'm gonna make sure that I get this up before tax day, which I believe is it still April 15th this year? I haven't even seen if they've extended it again or not. I imagine it not.
Yes, and I'm praying it stays April 15th.
Uh, oh, I'll be honest. I took full advantage of that 90-day extension. I think we still what's it called when you're the accountant or whoever says, hey, we can't file on time, an extension or whatever it's called.
Yeah.
Yeah, I've done those for the past couple of years, and luckily I've got a good. It takes care of me because like it's like we knew you weren't going to do it on time. So, but all right, thank you so much, Timberland, for coming on here. I really appreciate it. Like I said, taxes are one of those things that a lot of people don't like to talk about, but man, I will say this every day to everybody who listens: protect your money. Listen to people who help you protect your money. Hire people who help you protect your money. It's that simple. So, but thank you so much. I really, really appreciate it. And I will make sure that I check up with you in a couple of months, right when you're in busy season, so you can't get back to me until June.
Well, thank you. It was my pleasure.
All right. Take care. Thanks for checking out Starting Nowhere. Make sure you come check us out on Facebook, Instagram, and Twitter so you can interact with us and tell us your thoughts on this and other episodes.